For now, the price is in a no man's land with the wait a minute. The price is in the no man's land. It can fight and gyrate around this point. If the price stays above this point, it will move back up to fill the opening range gap. Then it will stall there. But it's still in a no man's land. Can fill out the no man's land with a higher probability of, you can say, with a higher probability. No, can you say? With a good risk to reward in which favors the buys. 950. Can fill out the opening range gap as can. So it's here. But still, it's in a no man's land, so I'm not trading. What is the no man's land from this point to this opening range gap? We have a lot of problems. Whenever the price is in a no man's land, this is usually often the case. Can gyrate around this point to this point, but once the probability is weighs to one side, I'll let you know, or let me know. If we stay here for long and move below this point, then we can move back to the N walk or this box, the market, but still in a no man's land. 953. I want the price for the filling of the opening range gap that would become more probable because we are losing ground for the bull side. That would become more probable if we regain this territory, the upper part, without much delay. Without much delay. If we get a closing below this point, or an extension towards the downside, I would not be going long for sure. It's 957. Hey, Big G, how are you? What's up? What's up, bro? I'm good. Thanks. If we regain this territory, then we can expect a complete fill of the opening range gap. But we should not use this point these coordinates as resistance. This should not be used as resistance. $58. Yes. Whenever we are in a no man's land, there's somehow ifs and buts involved. So it's a no man's land would be considered as a smaller time frame transitioning phase. So this is what I'm looking for to regain this territory. And should not use it as resistance. We will, if we continue, we have a long way ahead up above to go. So no hurries, no FOMO. The market has a lot to fight for. Once this is cleared, we have another thing above the opening range gap. We have a lot of problem here also. So see this? You see that? 10 o'clock and the new 15 minutes. This is the new 15 minutes candle. This can become a short-term short, but I'm not really willing to go short because once the price drops, if hypothetically speaking, if the price drops from here and we fight and fight, this can become a no long scenario. And then we can move down. This is a very hypothetical scenario, ifs and buts. Okay. So if we move down here, then the price will have the tendency to move back to this point. But that wouldn't favor the risk to reward, generally speaking. So in very long term, I'm bullish. So I'm be looking for retracements. Either I'm not trading or I'm looking for retracements to be buy. So either a retracement or I'm either looking for whether it's going to retrace that much further or it's going to continue from certain point. So these are the areas of interest I'm looking for, whether the price will continue its uptrend from these points or it's going to break or move a little more down. So this is generally what I always say. In a no man's land, I'm not trading because you see this chop. This usually occurs in the no man's land. If we if we stay here for somehow another and or either extend to this point another like 30 minutes, then it can become a no long scenario for now, for at that time, for Friday, for example. We regain this territory, then we can expect a fill of the opening range gap. Plus, then we will have another problem above the opening range gap. The market will fight. fight for its dear life. If it succeeds, then we'll move up, 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 and continue its big J. This big area is what I this box where basically is the market. I have written it the market because this is an extreme point. This is an extreme point. The market, if the market moves to this point, then I'll be looking for buy, or you can think of that as a backbone of the uptrend itself. So it's like either in your terms, you can understand it from this point, whether it's going to retrace from this line or it's going to manipulate from this price point and go up. From a retail standpoint, I can make you understand through this. No, I'm not using the retracement levels or anything, just using you can understand this as a risk to reward and higher low and higher high. Okay, so what would be this would be a 61 point or 71.8 retracement. Either this leg is going to be used to move up, or we can move below this point. That would become a manipulation leg and then move up. So it depends on, as the price moves down and down, I'll be analyzing whether it's a buy on a smaller time frame or not, whether it's giving me what I want or not. So this is a general narrative, and the market confirms, and matlab in a sense ke somehow I have my tools to validate or invalidate the scenarios or the narratives. It's 10-5 is the new 5 minutes candle. It's a no man's land, so a chop is usually expected. A skewed risk to reward is usually expected. I can trade on a smaller, say smaller. I could have, like, in a sense, the areas of interest, these are the areas of interest. Look how price responded to that. But it all comes down to having good setups and enough setups for you to frame a good risk to reward and filter out the bad trades from the good ones. So it only comes with a system, a complete system. Still in a no man's land, it would take another at least 30 minutes. Or if it extends a little more down, then I can sell the retracements back to the NVOG, which we touched earlier today, or back to this point. This is the coordinates. These are the coordinates. We have a lot of problems for the bears, like in all of these areas. So generally speaking, if I think in terms of risk to reward, I would favor bulls in, not in probability, in risk to reward. If I'm weighing the risk to reward, that favors bulls for now, but probability is dependent on what the market is doing. If the price regains this territory, it should not use this whole box as resistance. Then I'll be looking for to. But filhal, in a sense, I am in no man's land. Big G, it's like mm, I I'm not. I know where I'm stand, and I have a very good system. I have made it like from scratch, as if I was the first person who discovered the market, and I never listened. So it's like I'm never not going to teach this system to anyone, generally speaking. But I know, okay, the way I am operating might be helpful for a lot of people, because what I am doing is I'm trying to achieve the ideal, okay, and me being here is like I am trying to be the ideal for what I think the ideal is, right? So when I'm operating, you are just looking at it through how the framework or the real market works, so you can have your own idea. Because I'm a lot of things which I'm presuming or assuming, which I'm talking in a normal, which is normal for me, might not be normal for anyone else. If that makes sense. So basically, if it comes down to the close prices and all of these things, and I'll use a lot of other systems which correlate with my system. But the basic philosophy is like a continuation are is more probable than reversals. You don't look for, and this is the statements which I've come up with, which I can tell. The continuation is more likely than reversals. You don't look for reversals. Never look for reversals. A trend can be very long. Trend can get very, very, very long. So, and one thing other would be to remove your subjective thinking. The market is completely objective. If you backtest and have a system, it would more often than not negate with your gut feeling. So this has nothing to do with psychology or anything. You see, I knew it can be used as resistance, but I didn't sold it because I have a system which tells me it's all linked, which going to, I know 1,000% within the next 30 minutes or within the next 40 minutes I will have a trade. So that makes me not be uh, not be afraid of missing out, right? So the missing out part, the FOMO, people have a problem with the FOMO. No, it's because you don't have a system, and it's very hard for you to find a trade. So whenever you find a trade, you will always feel FOMO, obviously, because it's hard for you to find a trade. It's FOMO comes out of scarcity or lack of trades. Because I'm operating from this point of view, which when I have a system, so I can say these things, and I know, okay, this is the ideal point. It's nothing to do with psychology. Too many reversals are needed in today. Yeah, I have Big G. I've trained my mind to hold a thought for like 6 months, 6 months, a year. I've deliberately trained it. I've done a lot of weird things with the brain, but it's a very powerful thing. Once you get to a certain point now, you'll realize the click, people talks about the click. It's usually we have a tendency to look for reversals, and what we are afraid of gets our attention. So these are cognitive biases. What we are afraid of usually gets our attention more. So if it's an unconscious bias, you'll always be looking for reversals. But you see this how whenever I comes, I'll always fuck up. whenever there is a system which is totally objective, there's less chance for me to get involved. Even if I have a system who's, for example, if I have a system who have 100% win rate on my PNL, when I'll apply that system on my PNL, that would reflect about 60 to 70%. 60 to 70% accuracy. Even hypothetically, or the trading system has a 100% win rate, but you won't be able to trade. In a sense, you or I, and you will say, okay, oh, this is the problem. This is the I am the where is like we have a very unconscious biases which dictates our decision making process. No, Big G. It's not that you don't have the power to hold. The framework or the mental model you're using for trades is not adjusted to the time frame, or your duration of being a trader is not long enough, or you haven't back tested or integrated your time perception with the time frame you are operating on. For example, I'm using a 4 hours chart and I'm identifying trends which last for 20 days. But whenever I sit for trading, I'll be getting in and out. But that, you see that if the trend lasts for 20 days, lasts for 20 days, regardless of how I am feeling on those in those 20 days. If I have back tested, okay, it usually lasts for 18 days. Why would you mess up with the trade? So back testing again and again and again and again, repeated pattern recognition will help in this case. Repeated pattern recognition. You take screenshots, you my phone is full of screenshots. It's full of it, and I literally train my brain to watch these patterns every day when I before I get to sleep. You know what neural learning is generally, what I have understood. If you do one thing repeatedly, it would make sense, regardless of its rationality or irrationality. If one thing is irrational, it's yet to be rational. In a sense, I'm looking at this chart, I don't know anything about it, but I repeatedly look at it again and again and again every day. Then I sleep, then I wake up, I do my shit, and every day, then I will. So, after a long time, this would become my gut. Okay, my perception will adjust itself to the market. Can chop. Yes. Can chop. You understand why I say it's a no man's land? you see this? You see this box? And how the market is gyrating around and around this point. So usually this is the no man's land, and we haven't given extension below. The price would have extended below. This would become a no long scenario for now. It's 19, 10, 19. Slightly. We have a lot of problems. You can understand it from the point of view is that it's like a coiled up snake stuck with it itself. Another try. Nice. Yeah. We still have a lot of problems. We can come to this point, the low of this, probably. Still, it's a no man's land. We have this is the problem. This is the problem. What I'm talking. Can get stuck somewhere around the low of that to the high of that. This point. Low of this box. Getting rejected again. $23. But it's on a very smaller time frame. I do not want the price to move below the little bit of hope we have for the bulls will just move back into the no man's land and the chop will continue. This can make or break the chop for now because we have a lot of problems. This is an only green signal we have. Do not want the price to get stuck at this box high. 24. These are the general SOPs I follow because I have been hurt a lot. You don't know, man. So this, in summary, I would say this it's a no man's land because why would I have traded at this point? Long wicks, 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 and the chop. The market is fighting. Oh, nice. The cues. Watch how this market reacts to this box. Blue. This is this box, and it's also aligning with the 50% of the opening range gap. You know what? What would be really fucking amazing if we move up and above this box. But you know, not every day is ideal. Mm, 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 mm. 27. 3 minutes till the 15 minutes close. Look at that. Gorgeous. Gorgeous. PG 475. Nice. Still, it's 8:30. 8:30 and the new 15 minutes open. Boom. If we move up and above, see this, how this is getting recognized. These are the checkpoints. If we move up and above this point and stay above, then we can expect, you know what? You know what we can expect. So this two candles which are moving fast are the new 15 minutes, first minute candle of the 15-minute candle, and the second one, as in delivered to the upside. And now it has. And to the 50% of the opening range gap. $32. I can do what I'm doing 24 hours to 7 for the whole week, any time, even in the Asian session. So if I do not, I used to get really excited when things used to. But if you are operating from a state of mind which is working, and then you change it through emotions, so the basis of your decision making is changing. Why would you change the state? My emotions has nothing to do with the market. If the market is about to, for example, move 500 points, for example, It's going to move 500 points, regardless if I cut my trade here because I was scared, or regardless if I let it go. So it's just a blind machine. Nice. I do not want the price to get stuck. It can get stuck in either it can gyrate around, but I want, ideally speaking, the price to use this as support and give us a closing above. We, you know what, we are relatively safe. R- Relatively. Mhm. The market can get stuck within this box. Can. Within this box. If it wants to for continuation. The low of this box, the high. It all comes down to the risk to reward ratio. I have made money, like the same amount of money I've made on 300 points, I have same amount of money made on 50 points. It all comes down to the risk to reward ratio, lot sizing. For both of them to work, you need to have a system from which you can separate the good trades from the bad trades. You see this? Yeah, it is the middle of the range. But you see this? Okay, so you need to separate the good trades from the bad trades. That's how you can grow an account. If you just think in terms of, I have trained myself through the point of view of thinking in terms of not uh, money in terms of points. So I my success criteria was for myself was okay, how much points I have made in the market. So it's quite it's good for training, but once you get trained, you need to set your lot size dynamic because you're covering for a lot of bad trades in the good one if your lot size is good in the good trades. Whether market moves up, down, sideways, if the risk to reward is good with respect to the lot sizing, you're good. 37. You know what can happen if it's getting strong. You see this? One hour. I usually do not focus much myself on the targets, because if I have a predetermined target, I'm presuming that the market will get there somehow. So my focus is would be on the target itself. So I'm whenever I place a target, it's in a form of a measured move. It might not happen, it may happen, but I do have an idea okay, what is the standard deviation from the previous market till now. So I'm using the standard deviations for these targets, but generally speaking, as I have assumed a position of a bull, I would be looking for a standard deviation target, a one or two standard deviation. So as we were coming up, right, 1 hour, I'm not saying we will you might understand, I can hope you understand. But as we were 23rd January, 6 days. Where is it? Mm-hmm. Where was it the last time I used it? Okay, so this was it. So this is the basic logic I am using. Wait, check this out. Check this out. Minute. Mm-mm-mm. You see how the market is respecting this point. How it is getting recognized. Even the market when it was here, like anyways. Okay, so I was projection tools with the I'm using these are the projection tools. Okay. As I have assumed a position of a bull, so I would be looking for a standard deviation measured move with respect to the market. So removing this drawings in the power of 3. You see this point? This was the when I streamed earlier on Friday. Retracement leg I used. And that was the target. Right. 3. See this? So whenever the price moves, it moves in a measured moves, which is a standard deviations. So not only this. So once we are move above, once we have moved above. So it broke out of this range, this whole range. So the one standard deviation would be it's a pure basic logic. It's not hidden, it's everywhere, you can find it anywhere. Like in this first, the main important part is that I have taken a position of a bull. The targets are really not important, the targets are just for an idea, basic idea ke how long can we expect a move. Okay, so we will use different confluences with this. Just wait. So we go up. The market is getting strong. Okay, so we go up to the 4 hours. Okay, so this was the first leg. This is being used. The next one is, yeah, if you do that, and whoa, what? Yeah. Once we broke out this range, so that whole range, one standard deviation, both are getting confluences. Both of these fib or one standard deviation have a confluence at this point. So as I've taken a position of a bull, I'm expecting it to move up to this point. So that's why this is the target. But it's too early to, but that is the general trends target. If we continue up while moving through the checkpoints, it's 46. This is the new 15 minutes candle. The market can fight between this point and can stay this at this point. For the ideal case, if we rally today, if that, the ideal would be the for the market to move up and stay up, then we will move up for sure. Oh, it's 7 people are watching. Nice. I thought Big G only you were watching. Hey, empty journey. Oh, I remember you. You're from Camis. Oh, majority of you are from Camis. So is so this is how it is. The tape reading which I'm doing provides me a lot of good framework with a good risk to reward. I repeat the risk to reward because at the end, when you'll be a very, very, very good one day in trading, you'll realize that it all comes down to the risk to reward. The crux of trading is the risk to reward and lot sizing. It comes after when you have a good system. So when I'm tape reading, literally it's like I'm reading the market itself, and meanwhile I am jumping in, jumping out, which is me. Like when I include my subjectivity, I am doing, which has no bearing on the market itself, in a sense, which for example, if I trade here and I cut out this position here, nobody cares. Like the market doesn't really give a shit. So I have to be very, very, in a sense, objective and read the market, regardless of it's moving 1,000 or 100 or 1,000,000 points. You won't hear me say, okay, it's gone up, too up. It cannot move up now. No, no, no. Mm-mm. If it's telling me it's going up, I'll say it's going up, regardless of me being in the trade or not. So, nice. See how we broke out, can fill the opening range gap. But still, this can create a problem. So that's the assumed risk. Whenever there is a problem and I'm taking something or I'm framing a risk to reward, that would become the assumed risk. The problem, which I consider as a problem in trading, I would say that that's an assumed risk, because that's the risk I'm assuming. Then another layer of thought would be either you're assuming the risk, is it good with respect to risk to reward, or is it good with respect to the probability of trades? Because which is yet to be unseen, the market is going to reveal itself to me, which is, and it's not yet there na. When, if for example, if I say it's an example, very not telling you, for example, if I say I'm framing a risk to reward, but how do I know the reward? You can assume a risk, but how can you know the reward when the market hasn't presented it to you? So, for example, hey, please, this is a general example. Okay. So, for example, this is a risk. Okay. And so this would be, if I'm trading a range or ICT, like, this is my fixed risk to reward ratio. This is 1 to 2. But how do you know either the market is going to give you that or not? There's only assumed risk. Reward is better when you are managing it, in a sense, either you're taking partials and leaving a runner. Runner is like a surprise, either you get it or not. So reward cannot be measured. And majority of the time, if you don't mess up with your trades, it will go in your favor, obviously. $53. See why I'm telling you that this can create a problem. This can create a problem and the market can get stuck within this box. So we, what is the ideal case for the bulls is to move far away from this point, far away from this point. Then I'll be looking for retracements, for continuation. As we move further now, as we move further, this is what are just a random thought, which usually happens when I'm not streaming. So I'm just gonna share it to you. Doesn't mean okay, it's this is what I said or anything. As we move up, you'll see that this would become the, I'm hesitant to say it because you would don't take this seriously. It's just a random thought. This would become the bottom, which usually is. The price should ideally speaking should not go below this point. Mm-mm, mm-mm. That would fuck up our continuation. As we move away from this small range, we are entering into a bigger range. Range or the bigger time frame narrative. Do you see how this played out? Mm, 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 mm. So as we are progressing, mhm, mhm, mhm. $57 from 50. You see this? 50, 50, 50. From this point, another macro. To every hour. Last 10 minutes and the new 10 minutes. The same goes with the new 15 minutes. Every 15 minutes candle. Every 1 minute candle. Every second, every millisecond. Ah, you see how ugly this is? How ugly of a price action this is? No. Mm, mm, mm. Close, close. Close to filling the opening range gap. Unclone. Not completed. You're about to fill the opening range gap. There was a one standard deviation gap which was unfilled. Where the hell is it? We closed here. We opened here. Yeah, clone. And this was the gap. So it's 11 o'clock and the new 15 minutes open. Okay, so this can go on and on. It can slowly grind, but I do not want. You have to understand, whenever I'm drawing the area of interest doesn't mean the price will gravitate towards that point. I While I'm getting validation through my narrative or my tools, then I'll be looking for target. If I'm using dekho, if I'm using this as an area of interest, it's based on on an assumption that I am a bull. Okay, so it's layered upon layered upon layered upon logic. So it doesn't work like it's just there, it will get tagged. So the criteria would be, first you have to keep in mind it's Friday. Second, you have to keep in mind if we fill out the gap and stay above, this is the price point. Generally speaking, the you can remove this, even remove this for your understanding. We should stay up above the 50% of the opening range gap. That would be extremely bullish. Then you can use it for no short scenario. But if we move up above, we are back in the no man's land. So thank you guys. I hope you learned something. Talked a lot. Mhm.